Why is the new wave of capital flight from China so huge? The price war that has lasted for several months in China's auto industry has caused huge losses to automakers and auto dealers. Following the collapse of Yongao Group, a well-known auto dealer in Guangdong, Beijing Xingdabao, the world's first BMW 5S store, was recently reported to be empty. According to the financial sector on October 24th, Beijing Xingdabao, located in Chaoyang District, Beijing, suddenly closed its doors, and a notice of closure had been posted at the door of Xingdabao. Xingdabao's notice stated, affected by the overall economic environment, it is currently facing serious financial pressure. In order to better protect the interests of customers and employees, the group is actively seeking capital injection or other group trusteeship solutions to solve the current difficulties. BMW brand authorization was terminated on October 20, 2024, and the company is currently suspending new car and after-sales-related businesses. Some consumers broke the news that they paid a deposit of more than 10,000 yuan but could not pick up the car or get a refund, and all the rights and interests previously recharged in the store were also invalidated. The consumer said, "I ordered a BMW i3 from Xingdabao in June this year. The contract stipulated that I could pick up the car at the end of August, but the car has not been delivered yet. I asked the store to return the deposit, and the store replied that it could be returned within a week. However, I waited for it to run away." Public information shows that Beijing Xingdabao opened in June 2012 and is located within the East 5th Ring Road in Chaoyang District. It covers an area of 22,000 square meters and has a total investment of more than 320 million yuan. It is the world's first authorized dealer of the new BMW 5S. According to reports, as early as July, BMW dealer Xiamen Zhongbao was exposed to delivery delays and other issues. At that time, there was news that Xiamen Zhongbao was facing a capital chain crisis due to poor management, which led to the inability to deliver the vehicle certificate pledged at the bank to customers. On September 10th, the Fuzhou Kangshan branch of the Bank of China Commerce sued Xiamen Zhongbao in the Fuzhou Kangshan District Court for financial loan contract disputes. Xiamen Zhongbao has a close relationship with Beijing Xingdabao, which ran away this time. Tianyancha information shows that the shareholders of Beijing Xingdabao Automobile Sales and Service Co. Traleti are Tianjin Tianbao, Automobile Sales and Service Co. Traleti, and Xiamen Zhongbao Automobile Co. Tlti. Both companies point to Beijing Zhongbao Excellence International Trade Company Limited, hereinafter referred to as Beijing Zhongbao. A document circulated on the internet shows that BMW will stop authorizing Beijing Zhongbao Excellence International Trade Co. Tradestyle Lidari RGA Group and its parent company on September 20th, including 9 BMW 4S stores, 2 BMW Quick Repair stores, and 1 city showroom under the latter. The reason is that GA Group breached the contract, had serious customer complaints related to the certificate of conformity, and overdue payments to BMW and its affiliated companies. According to the notice issued by Beijing Xingdabao, the final termination date of the BMW brand authorization may be extended to October 20th. The Singapore GA Group is one of the top 5 BMW dealers in China. It also represents luxury car brands such as Ferrari, Porsche, and Maserati, covering cities such as Beijing, Harbin, Xiamen, and Fuzhou. It is worth noting that under the price war of new energy vehicles in China, major auto dealers, including BMW, are struggling, and there have been repeated reports of auto dealers going bankrupt. According to the Daily Economic News, Yongao Investment Group Carmarine Châteauloud, a well-known auto dealer in Guangdong, went bankrupt in January this year due to a broken capital chain. The company owns more than 80 auto brand stores, and its auto brands include Audi, Volkswagen, Mercedes-Benz, BMW, Land Rover, Jaguar, and other famous cars. According to survey data from the China Automobile Dealers Association, in 2023, more than 60% of dealers did not achieve their annual sales targets. Looking ahead to 2024, dealers believe that competition will be more intense this year, and they will continue to face problems such as falling new car prices, inventory pressure, tight funds, and low profits per vehicle. In fact, the price war in China's auto industry that has lasted for several months has not only failed to bring the expected market benefits to foreign-funded auto companies in China, but has caused huge losses to the value of auto brands. Since the beginning of this year, international luxury brands, including BMW, Mercedes-Benz, and Audi, have withdrawn from the price war. Why is the new wave of capital flight from China so huge? The Wall Street Journal reported that despite China's strict capital controls and strict annual foreign exchange purchase limits, Chinese residents have illegally transferred hundreds of billions of dollars abroad in the past year, right under the noses of regulators. According to the newspaper's analysis on October 23rd, the reasons for the large-scale capital outflow include the COVID-19 pandemic, the government's crackdown on the private sector, and widespread concerns that China's era of high-speed growth has ended. A data analysis conducted by economists and the Wall Street Journal shows that the scale of China's capital flight in the past few years has dwarfed the first wave of capital outflows caused by China's real estate market downturn in 2015 and 2016. According to statistics from the Wall Street Journal, as much as $254 billion of funds flowed out of China illegally in the year ending in June. The large-scale capital flight from China highlights the fact that those who have the resources and financial means to take money out of the country are increasingly losing confidence in the development path of their own economy. To evade government controls, people are taking risks with old tricks, such as shipping valuables overseas or paying exorbitant prices for imported goods. Others are coming up with new ideas, such as shipping computer hard drives loaded with cryptocurrencies to other jurisdictions and exchanging them for cash there. China's epic real estate crash and economic uncertainty have prompted people to move money overseas, with Barclays estimating that about $18 trillion in household wealth has been wiped out since 2021. The Chinese government has recently introduced a series of large-scale economic stimulus measures, which analysts say may boost economic growth this year in the short term, but whether they can lead to a sustained recovery remains uncertain. Moreover, in the long term, China faces the challenge of an aging or even shrinking workforce on one hand, and conflicts with the United States and the West on a range of issues including trade, security, and technology on the other. Beijing authorities have cracked down on some cases of money transfers in an attempt to set an example, but the Wall Street Journal quoted Rasmussen, a senior strategist at research firm Exante Data, as saying that capital outflows are still happening, which shows that investment opportunities in China are scarce, and people are willing to take risks to get better returns. According to people at family offices that manage Chinese funds, some business owners set up shell companies overseas in the name of family members, and then use overseas companies to acquire shares in their China-based companies, turning them into Sino-foreign joint ventures, thereby transferring funds overseas in the form of dividends and other payments. Transferring funds through art is another method. People familiar with a large auction house said that the method is simple. A painting or other precious artwork is shipped to Hong Kong for auction, and the proceeds from the auction are stored in the form of US dollars or other foreign currencies in Hong Kong, where there are no capital controls, and then the seller transfers the money out. Another way is to transfer funds with the help of cryptocurrencies. Although China banned cryptocurrency transactions in 2021, it is not illegal to set up cryptocurrency wallets. Chinese people can use RMB to buy crypto assets with the help of intermediaries. Once they have cryptocurrencies in their digital wallets, they can exchange them for US dollars abroad. Xi Jinping, the leader of the Communist Party of China, is willing to make a 180-degree U-turn on policies to stimulate the stock market. However, this surge lasted less than 2 days. Over the past 2 weeks, A shares have absorbed 2 to 3 trillion yuan of people's hard-earned money. On October 11th, major banks that had previously been silent on loans for stock trading suddenly shifted their stance. Over 20 banks issued emergency declarations stating that credit funds are strictly prohibited from flowing into the stock market. Domestic netizens commented that banks know once money enters the stock market, it cannot be withdrawn. At a time when just two things. First, that the stock market situation is dire, and second, that CCP officials are not taking Xi seriously. In any case, Xi is already seen as a bad emperor. It appears the public's support has waned, and many are waiting for his downfall. Xi Jinping is desperately trying to boost the stock market. The banking industry has abruptly stopped. Professional investor Bales wrote that the end of this so-called bull market is certain. It will undoubtedly end in chaos, though he is unsure who will take the blame.
我
The
有的时候
market's
真的就
collapse
在
was
想，那
triggered
上
by
大
the
学到底
central
有什么
bank,
意
and in the
义？
end, it may be a group from the central bank that gets purged and scapegoated. Despite this, authorities are still trying to stimulate the market. The Ministry of Finance is scheduled to hold a press conference on Saturday, where they are expected to announce further large-scale fiscal stimulus measures. Asia Finance holds little hope for these measures, arguing that what is truly needed are political reforms. Without meaningful structural reforms, not only will the stock market continue to fall, but China's real economy will be carved up by emerging markets like India and Vietnam. Asia Finance also pointed out that when China's stock market bubble bursts, large investors with insider information typically benefit, while the vast majority of small investors suffer losses. For instance, during the 2015 stock market crash, the rich and powerful pocketed 250 billion yuan from the poor. This tragedy may repeat now. If the poor finally wake up, A shares may struggle to stay above 1,000 points. Some analysts believe that the CCP's policies aim to destroy people's savings. A Self-Media article revealed a harsh truth. Having too many deposits is not favorable to those in power. Current policies are designed to deplete people's savings. Excessive deposits mean that money is idling in the financial system, which hampers economic circulation. The government's solution is to issue more currency and encourage spending. Their top priority is to get people to withdraw their savings. However, after learning from recent years, people are cautious, neither investing nor spending, but saving. To counter this, authorities have made a bold move in the stock market, using experts and Self-Media to create momentum, persuading some to invest their savings in stocks. On the last trading day before the holiday, the 3 trillion yuan trading volume was drawn from investors' deposits. Yet, both deposits and loans have limits. After a sharp rise, a sharp fall follows. Stock traders often find it hard to stop during a rising market. When caught in the excitement, they may be wiped out by a sudden crash. Those who use savings or even take out loans to speculate in stocks risk not only losing their life savings, but also falling into deep debt. The article concludes that starting a bull market is a way to eliminate deposits. This bull market will result in another major transfer of wealth from the majority to a small elite, from the poor to the rich. Instead of thinking about making big profits in the stock market, one should focus on protecting their savings from being wiped out. Observers are concerned that in the context of economic downturn and soaring unemployment, Chinese society is already prone to instability. Now, with the government taking risks, there is a possibility of economic collapse this year, which may lead to public rebellion, social revolution, or alternatively, in response to this looming crisis, Xi Jinping may tighten control, shift to a planned economy, and North Korea eyes China.